With Europe in the midst of a debt crisis and an accelerated downward slide for the US greenback, the overseas financial landscape is looking seriously potholed. The Australian stock market originally took a dive yesterday and then recovered, leaving many mum and dad investors feeling unsettled.
Yeah, but Aussie experts are warning against panic, with some banks offering customers a little peace of mind with lower interest rates. So where's the silver lining in all of this doom and gloom? We hit the streets to ask your survival techniques.
Well, it's actually not stressful because it's actually an opportunity, so the smart people are buying now.
Just saving, I guess. Put money away and save. Yeah, that's pretty much it, especially when you have kids.
I guess more people save, the worse it gets in a way. You want people to spend money, but at the same time, you don't want to spend, I do, you want to save. So it's kind of a catch-22.
But I'd say hang on to what you've got, don't sell. Market's going down, don't sell.
Take long-term views rather than short-term reactions, yeah.
Probably buy now while it's cheap and save it.
A variety of views there. Some say buy, others say save, but most see the current situation as an opportunity. So, what's the reality? Money guru Anthony Bell is here with his advice. Hello, mate.
Morning, Les.
Testing times, hey. Clearly Australia's in a stronger economic position than Europe and the US. You know, it looks that way. Are we likely to stay that way? Are we in a good spot?
Volatile is probably the word of the day and perhaps the word of the week. The pendulum, Larry, has been swinging from really big losses and then comebacks like yesterday. I mean, could you imagine we were down 5% in the Australian stock market in the first hour of trade yesterday, and we actually closed up 1%. So wow, for those who got in at the bare bottom and watched it come back up, they made 6% on their money in a day, which is, some people wait a whole year to make that. So there was opportunity out there, as was mentioned by actually one of the viewers on the street.
Yes.
Anthony, two of the four big banks have cut interest rates on fixed rate loans yesterday. What's likely to happen with interest rates now?
This is a really cool thing, Sonia, because when you watch their long-term views come down, it's telling you that the banks actually believe that interest rates in the long term won't actually fly up to 9 or 10 or 11%. So it brings back a bit of confidence on where they think rates will be in 3 years' time. So now that they've cut rates, they're probably saying that they don't think Australia's economic rise and all these interest rate fears of increase are actually going to come true. The banks aren't in the business of losing money, so they're saying that they think the long-term view is inside 7%, and that's a really good thing. It should give a little bit of confidence back to everyday mum and dads.
Mortgage holders.
Yeah, mortgage holders or credit card holders.
Not so good for retirees, though, is it? Well,
no, because, I mean, retirees get to a certain point where they want to cash out and not have the risk of these stock market fluctuations and just have, you know, certain income in term deposit. So that would generally mean that term deposit rates will start to come down. But, you know, right now you can still get over 6% on term deposit. So if you need that age of retirement, it's probably worth having a look at before, you know, you absolutely rattle the cage a little bit.
Something for you to consider nearing retirement.
As my retirement gets close, yes, and it does. We spoke earlier about some good opportunities to make money. Yeah. What are you telling your clients? What happens here? Do you wait for it a little bit, settle down? What do you say?
Look, again, one of the viewers in the street said long-term financial policies are good and they are still the best. But, you know, I'd probably be looking and saying that if you are nervous and you do need your money, you can still not run the risk in the short term of the market falling, and it is volatile, so you can still get over 6% at term deposit. Really look closely at shares and tips that you're going to get from your mates. They're going to come from everywhere, but I'm saying blue chip only, so AAA rated securities are the only way to go. And look, I still like property. Australian property at under $600,000 is paying over 5% on yield per year, and the growth looks pretty good into the future as well, so it's probably showing a market of about 13-14% growth year on year, which isn't too bad.
So what are the investments that you should keep a hold of right now?
Yeah, and this is a big question that was going around yesterday, because most of the phones ringing, Sonia, were, what do we actually get out of before things drop? So, look, I look to the things that actually are making money, and a lot of share buying yesterday took place in Commonwealth Bank because it's paying really good dividends, and there's no reason why the share price was low, so there was good buying in that. So if you're holding residential property and it's making good money on rent, continue to hold that. Gold's a really interesting one, because the gold went flying up to like basically $1,700 an ounce.
And that was just raced to that.
Well, you saw the Australian dollar start falling. It hit 99 cents overnight as well, down from highs of $1.11 only a month ago. So it's telling you currency's volatile. But if you were going to have a bit of a punt, I'd punt on the Aussie dollar going back up and back up relatively quick, because the US is going to continue to weaken. I'd also too just say anything that's blue chip in mining stocks, or of course blue chip in banking stocks, hang on to them. Commonwealth Bank is still paying high rates of dividends. Actually, if you put $100 into Commonwealth in shares, you're going to get more return on that 100 than you are on term deposit. You've just got to deal with the volatility of owning shares that might go up or down.
Mate, in closing, don't panic. Is it she'll be right, mate? Is that what we're saying?
Look, I think it's can't be do one, do 1,000. If you're a little bit more elderly, as you are,
We've started
Oh, you guys are ganging up on me.
no, I'm sorry, we're coming at you from all angles.
Yeah.
No, but if you're part of the early Australians and you're sort of getting to that retirement age, you should look really closely with your advisor on whether or not it's time to actually not go through the volatility stage. If you're long term, it's it's a bit like being on a boat, mate. It's not a good time to get off a boat when it's rocking, so just stay through it. Do you know what I mean on that? Provided that there is good stability in what you actually have.
Okay. Well, when my Nigerian Prince money comes through, I'm going to buy Australia because it's $8 trillion and kick you both out. Thank you, Anthony.
Very good, mate. Thanks, Sonia.
Thank you, Sonia, for the superannuation line.